Learning how to day trade can be overwhelming. With so many strategies, rules, and opinions out there, it's hard to know what actually works. So in this video, I'm gonna show you exactly what I would do if I had to start from scratch. No fluff, no guru talk, just the real steps I took that actually worked. If you don't already know who I am, my name is Raul. I've been day trading full-time for the past 9 years almost, and I've made 7 figures over the course of my trading career, with also being the very first funded trader to get a verified 6-figure payout day trading. I've also coached thousands of traders and helped many of them find consistent success. But trust me, I started with zero knowledge, no guidance, and a whole lot of trial and error. Now let's get right into it. So chapter 1, what most people do wrong. Now before I tell you what actually worked for me, let me first tell you what I wouldn't do. Number 1 is gonna be chasing signals. Most beginner traders get stuck in the cycle of blindly following callouts from Discord groups, Telegram chats, or Instagram traders. You may think someone else knows better, so you copy their trades without understanding why. Now the problem is when it doesn't work, you panic, you don't know how to manage the trade or when to exit, and you end up taking unnecessary losses, and you never build your own edge that way, especially if you don't understand why that trader is taking that trade. Number 2 is gonna be strategy hopping. Every time a trade doesn't work out, most people immediately assume the strategy doesn't work, they throw it away and they move on to the next. They bounce from scalping to swing trading, from MACD trading to Fibonacci's, trying to find the perfect setup. But the truth is, most strategies work if you master them. But consistently switching your strategy means you never give yourself the chance to get good at any of them. Number 3 is gonna be trading without a plan or a risk management system. Now this one specifically is killer. A lot of people take trades based on feelings, FOMO, or hype with no stop losses, no targets, no risk management system. It's like kind of driving blindfolded at 100 miles an hour. You may get lucky once or twice, but eventually it catches up to you. Risk management is the difference between surviving and blowing your accounts in this market. Then of course, thinking that trading is gambling. Trading and gambling might feel similar when you're new, especially if you're taking random trades without a system, but real trading is about stacking probabilities in your favor, managing downside, and thinking like a professional. And this is my favorite that the newer traders make, which is not journaling. This is probably the most overlooked at habit that separates consistent traders from the rest. If you're not journaling your trades, your entries, your exits, thought process, wins, losses, you're trading completely blind. You can't improve what you don't track, and journaling is how I found my edge and fixed my biggest mistakes over my entire career. Now, chapter 2, the shift that changed everything for me. Now, first and foremost, let me be real with you. I didn't start winning in the markets because I found some secret sauce or some magic indicator or like a light bulb moment that a lot of people like to talk about. It was because I finally stopped making dumb choices and made very few key shifts that changed everything for me. This is when things really started to click. So number 1 is learning one strategy instead of many. When I first started, I was trying to learn everything at once. Breakouts, scalps, swing trades, VWAP, Fibonacci, you name it. I thought more strategies meant more chances to win, but that couldn't be further from the truth. What really changed the game for me was picking one setup, something simple that made sense to me, and going all in on mastering it. I stopped chasing every new shiny thing and started focusing on consistency. That's when I actually started seeing green days stack up. Then over time is when I started to find new ways to increase my edge, but it all started with focusing on that one strategy. Number 2, focusing on price action and market structure. I used to rely on indicators like RSI, moving averages, and all that stuff, but I was always late. I'd get in after the move already started or get chopped up trying to follow signals that made no sense in that moment. Once I started actually focusing just on pure price action, like where the buyers and the sellers were stepping in, where liquidity was sitting, key levels from the previous day, everything changed. I finally understood what the market was telling me, and instead of reacting to what some line on the chart was actually saying. Market structure and price action gave me confidence in my trades more importantly, and I highly recommend you guys start getting into market structure and just price action reading to get started. Number 3 is journaling every trade. I know it sounds boring, but this one right here is a cheat code. I started journaling every single trade, what I saw, why I took it, how I felt, what worked and what didn't work. And over time, what I started seeing was patterns in myself. I started realizing that I kept overtrading after losing trades. I'd sized too big on setups I wasn't confident in. I saw what my actual winning setups were, not what I thought they were in my head. And more importantly, journaling gave me that clarity, and that clarity gave me control. Number 4 is gonna be treating trading like a business. This is where I finally stopped playing games. I used to show up whenever I felt like it, no real prep, no risk plan, just feelings, and that's why I kept losing. Once I started treating trading like a real business with structure, discipline, systems, my whole mindset changed. I built a pre-market routine. I know my risk before every trade. I had rules. I tracked performance. I stopped trading just to trade, and I only executed when my edge was present. And those were the rules that I followed that finally got me those consistent green days that I was seeking for. And now let's move on to chapter 4, my exact and current setup. All right, everybody. So now I'm going to walk you guys through the trading platforms I use, the brokers I use, the prop firms that I trade with, and more importantly, I'm going to walk you guys through my pre-market prep, the key levels I like to pay attention to, and how I actually mark up my key levels. And then on top of that, I'm also going to walk you guys through my execution timing. So there's a few different trading platforms that I actually trade with. Now, the very first platform that I use, although I don't really trade on here all too much, is going to be Think or Swim. What I like about Think or Swim is basically the interactive charts that you can actually get from using Think or Swim. It's kind of very similar to how you can actually set up TradingView, except here I could just really quickly open up my watch list. If I want to go through Tesla, I could go through Tesla. If I want to look at NQ, I could go through NQ, ES, SPX, SPY, QQQ, whatever I want, basically in the click of a button, and all my charts are basically set up the same. Now, sometimes I will actually trade on here, although this isn't like my main trading platform that I trade on. I do a lot of my analysis on here, so I can just head over to charts. If I want one big chart and I want to mark up my key levels on the day, let's say for ES, I'll just simply type in the ticker symbol that I'm looking for, which in the situation is going to be ES, and you guys can see ES will pop up here, and I can mark up my main key levels, or I can go to flexible grid here. This is currently how I have my grid set up. I have my 2-minute time frame, I have my 5-minute time frame, and then I have a little bit of a longer intraday time frame, like a 1 hour or a 30-minute time frame. This is the chart that I'm using the most. Now, sometimes I won't necessarily execute or trade directly on Thinkorswim because the broker that I have for Thinkorswim is Charles Schwab. Sometimes I'll be trading prop firm accounts, which I'll have another monitor specifically for executions, which I'll walk you guys through those as well. But I want to walk you guys through my trading platform. So this is going to be number 1, is going to be Think or Swim. And again, like, you could pretty much open up anything on here. You can open up cryptos, futures, gold, commodities, metals, forex as well. Whatever you guys trade on, you could use this platform to just mark up your charts. And I feel like it's a lot nicer than TradingView, especially because you can have like time and sales. You can have a lot of different tools on here. You can have a book map on here as well, which the book map is loading, as you guys could see there. But Thinkorswim is going to be the number 1 platform that I currently use right now for my markups. Now, moving on to platform number 2 is going to be ATAS. This is going to be an order flow trading platform that most prop firms do allow you to actually even trade on ATAS, just depending on which prop firm you're actually trading with. But you have a lot of different optionalities here, especially in terms of like charts that you can actually use. There's a liquidity map, as you guys can see here. There's a big trade indicator map on here as well. For me personally, the only reason that I use ATAS is not for a footprint chart, but I like to use ATAS specifically for my volume profiles, so I could really see where these institutions are accumulating their positions and where a lot of volume is being done and being really transacted here on a day-to-day basis. So you guys can see it's really easy for me to identify the high volume nodes and the areas where a lot of accumulation and liquidity was generated throughout the day here. And I can also identify these low volume nodes. So you guys can see here we have low volume nodes inside of the markets, and then we have these high volume nodes over here. And what you can actually see here is that a lot of the times, a lot of liquidity isn't even generated at these highs, or a lot of liquidity isn't really even generated under these lows, as you guys can actually see here, which a lot of people seem to think that that's where the major liquidity is. It's like, no, you're going to find a lot of the liquidity sitting inside of a market, inside of a range of accumulation, not above a high or below a low. This is where a lot of business is being conducted, although you will see that there will be passive orders above highs and above lows, which you're going to have your stop limit orders, and you're going to have your buy stop limit orders as well. So I use ATAS for a volume profile, which I've done many videos on volume profile in the past. Just go back on my YouTube channel and look at the last videos that I've actually posted. Now, the third trading software that I actually use is going to be Sierra Charts. Now, Sierra Charts is my most important trading software because it gives me access to my Delta footprint chart, which I have one here for ES. I also have one kind of set up for NQ, although I don't use NQs too much. I don't really trade NQ because the order book is really thin compared to ES. The order flow data doesn't present as great because of how thin that order book actually is. But you guys can see here on my Sierra Charts, I have my entire footprint chart setup, which you guys can literally go online and buy your own footprint chart setup. It's a couple $100, depending on how complex the footprint chart is. It can run you up to maybe $1,000 max. But as you guys can see here, I have delta by price. So I can see where we have positive deltas and insinuating aggressive buying or passive selling inside of these ranges. And I also have volume by price here. I have a quick DOM on my right-hand side, so I can see all of the limit orders and where the majority of liquidity on that trading session is sitting inside of the markets, waiting to actually get filled and executed. Then I have my actual footprint charts here, or my footprint clusters as well. So I have volume by price here. I have delta by price for the cluster. I have total volume and then total delta here as well. So cumulative volume, cumulative delta for the actual cluster itself. I have my volume profile level. So I have a value area high, the POC, and then I have VWAP, and then the value area low. So Sierra Charts is where I'm hosting my footprint chart. Now I have two charts. I have a 5 range bar chart, and then I have a 32 tick range bar chart, which, guys, I did a whole video on footprint charts. Just go back in my YouTube channel and go look at the last videos that I posted regarding the actual footprint charts themselves. And then last but not least, another trading platform that I actually use is TradeLocker, which TradeLocker is a CFD platform, which you could trade Forex, indices, commodities, and gold on, or metals on as well. So this is one of the platforms I use every single day. And right now I'm literally in the middle of a 5K challenge. So what I've done over these last few days, I hosted an order flow webinar and I deposited $5,000 into a brokerage account, which I did mess up a little bit, but you guys will see the entire process. Now I'm trading this account live in front of my entire community, which if you guys actually want to join and watch me turn $5,000 into $20,000 live, then make sure you click that very first link in the description and actually join me a part of this journey. Now you guys can see I have my total account balance here currently sitting at $8,000. So I'm already $3,300 in profit on this account, which I'm taking every single trade live. I'm not taking any trade off stream, but TradeLocker is another platform that I'm actually using. It's very similar to TradingView, which really you could go ahead, change any time frame you want. If I want to go on a 10-minute time frame, I go on a 10-minute time frame. If I want to go on a 15-minute time frame, I can go on a 15-minute time frame. And it's super user friendly. You can set your parameters before you even enter the position. But I also wanted to show you guys TradeLocker as well. Now that I've actually shown you guys all of the trading platforms and softwares that I use, I want to go over some of the brokers and prop firms that I actually traded with or currently trade with to this day. So number one is actually going to be Charles Schwab. So Charles Schwab also allows you to trade with Thinkorswim. I use Charles Schwab for long-term investments, and I also use Charles Schwab, as you guys have seen before. I've actually traded a couple of options contracts, and I'm actually getting into options trading a little bit more. Mainly right now with options, I'm focusing on just using the ES order flow data, executing on SPY, either 0 DTE, 1 or 2 DTE, depending on the actual volatility inside of the markets and the implied volatility for that week and that specific day, which in the future I'll make more videos on options and my approach to options trading specifically. But right now I'm mainly just focused on futures and on CFDs, as I'm just starting to get into options and my game plan is a little bit different. But I wanted to show you guys Charles Schwab because I do trade with Charles Schwab, which they also offer futures and Forex trading as well. Number two is going to actually be, this is the second broker that I traded with, which I trade on TradeLocker, which is going to be Athens Markets. So they are bringing back MT5. This is a Forex broker. They've been around for, I believe, 4 or 5 years now, and I've never had a problem with them. And I've shown you guys really large withdrawals from this broker as well. So if you guys want to trade on TradeLocker, you guys want to trade Forex, commodities, even indices and cryptos as well. You guys can definitely check out Athens Markets. There'll be a link down in the description. Number 3 is going to be Top Step, which I've traded with Top Step a little bit throughout this last year or so. I've gotten multiple payouts from Top Step, and I think as of right now, they are probably one of the most fair futures prop firms out there, just simply because of the rules that they actually have in place, which you guys can see. I'm going to post a screenshot right here of my most recent payouts with Top Step, although I don't really focus on trading with Top Step all too much because I'm somebody who's more focused on trading my own capital, but it was kind of something that I just did for my community more importantly. But I also did want to talk about Top Step and show you guys Top Step as well, because their rules are pretty fair in my opinion. So if you're somebody that trades Forex, you're somebody that trades commodities, metals, even indices, you guys can come out and come check out Leveled Up. Leveled Up has no Leveled Up currently right now has Leveled Up right now has no equity trailing drawdowns. It has no end of day drawdowns. It's a standard Forex prop firms, which you guys can see the pricing here for an 100K account is $436, where once you actually pass and get your payout, that $436 will be returned to you. It is a refundable fee, and also you guys will get the opportunity to receive payouts on a daily basis, unlike Top Step where you have to have 5 green days inside of the markets. You guys can actually have the opportunity to get daily payouts here. So again, if you guys want to check out Leveled Up, there will be a link down in the description. And then last but not least, you guys can actually check out Apex Trader Funding, which Apex Trader Funding, I think, is a really great opportunity for scalpers specifically. They do have an equity-based trailing drawdown, so it'll definitely work out better if you're somebody who's a scalper until you get over trailing threshold, which at that point you have no longer an equity trailing based drawdown, and then you can start holding trades for a little bit longer term. But the thing about Apex that's really nice is you're allowed to copy trade up to 20 accounts. So even if you only make $1,000 on a specific trade, risking $500, you just made $20,000, which is really nice. And the concept of Apex is super sick. So if you guys also want to check out Apex, there will be a link down in the description as well, so you guys can go ahead and check out Apex. So now that I've shown you guys the trading platforms that I use on a day-to-day basis, I've also shown you guys the brokers and prop firms that I use as well. Let's get right into my pre-market routine. So now I'm going to walk you guys through my entire step-by-step process of my pre-market game plan and basically what my entire trading day actually looks like. So you guys can either mimic the same exact pre-market plan, or you guys can actually use this and build off of this pre-market plan and build it into your own, because I know each one of you guys trades order flow. Not each one of you guys only trades yes, no. A lot of you guys may trade a lot of different instruments, but this is just so you guys could see my pre-market game plan and how everything is predetermined and already structured, and how we're trading like a business and like a professional. So first and foremost, I wake up every single day at 8 a.m. Like, it's a discipline thing. I have to wake up at 8 a.m. I'm not waking up at 8:01. I'm not waking up at 8:20. I'm not waking up at 8:30. I have to wake up at 8 a.m. It is super important for me. So this is the time I wake up and actually do kind of like a little bit of a mindset priming, if that's how you want to actually call it. So number one is I actually start the day with intention, not noise, no phone for the first 30 minutes of the day. So immediately when I actually get up, I don't look at my phone. I don't immediately start brain rotting on Instagram Reels or TikTok Reels for that case. So as you guys see, number two is going to be no checking charts, no social media, no trades immediately, because one thing I actually used to do in the past is I'd wake up and immediately check my phone and automatically enter a trade just because the setup looked good. And then also I like to firstly ground myself. So then what I do in a quick morning routine is I like to get hydrated. I drink water. I obviously like to take a shower to wake myself up. And then immediately after that, I go right outside. And what I mean by going right outside is right now, I'll go into my balcony and I'll just literally soak up the nature, if that's how you want to call it, and get into the sun, because that's something that really helps me wake my mind up and get myself in the right mental space to actually get in the market. And it kind of helps me also get rid of the baggage that I may have dealt with the night prior, or anything that I may have dealt with early in the morning, whatever the case might actually be is. But that's something that's super important for me, and you guys have to find what's super important for you to get you in the right state of mind to actually come into the markets and make the right decisions on a day-to-day basis. Remember, this isn't a hobby. You're in a professional field where you're actually trading against huge banks, institutions, and people that are genuinely just a lot smarter than you are. So you need to have your own step-by-step process on how you can prepare yourself to fight that battle of that day. Then more importantly is I like to set my mental tone for the day, which is of course calm, focus, and discipline, because if I'm anxious, if I want to trade, then I know I'm probably going to start making decisions that are based off of those feelings. So I like to come into the markets and really just prepare myself to be calm, focused, and disciplined. Now from 8:30 to 9:15 a.m., this is going to be my pre-market analysis and game plan. So the first part of my morning routine, waking myself up and getting myself ready, is roughly around 30 minutes. Again, like these are rough numbers. Sometimes that might be from like 8 o'clock all the way to 8:45, and then my pre-market game plan analysis shifts forward a little bit. But just to give you guys like a general guideline, it's not like I'm looking at the clock. Oh, it's 8:29. I got to get to my office now. No, it's not the case. So the pre-market analysis at 8:30, this is where I transition from being a regular human to just focusing on being a trader and completely just blocking out any external noise. So number one, the very first thing I do is check the economic calendar. Although I already may know, because I like to check the economic calendar almost every single day, is the very first thing I do is I'll wake up, I'll open up either Forex Factory, Econo Day, or Trading Economics. So Trading Economics is my favorite economic calendar to check. And I mark up any high impact events that may happen on that day or any days coming up. So if I know that, hey, you know what, it's currently Tuesday right now, we have CPI tomorrow, we may expect some chop or less volatility today, as investors and participants are going to be waiting for that CPI report to actually come out, then I can move forward and plan accordingly to that actual economic event. And a lot of these economic events, guys, are again big catalysts in the markets that move these markets. CPI, NFP, FOMC, GDP, unemployment claims, like these are all super important things that you have to be paying attention to. And of course, if Jerome Powell is going to speak after any FOMC meeting, whatever the case might be, is. So we have to prepare for those times. Now, I know the release times and how they impact volatility windows. That is super important as well. If an event is scheduled during my active trading window, I plan to either stay flat or use smaller size, either like 50% or 60% less size than what I would actually use before moving on with the rest of my trading day. Now, number two is I like to review what the overnight session did. So what did the Asia session do? What did the London session do? Did ES establish a new high or new low compared to yesterday's RTH or like regular trading hours? So like the New York session. And are we opening above yesterday's value, or are we opening below yesterday's value area? Which this is what's super important and why I like to use the volume profile chart, because we can clearly see that today's trading session, we opened up significantly higher. So the trading session actually starts here at 1:30 p.m., which this is just, the time is just off. This is actually 9:30 Eastern open. So you guys can see this is where we actually found value on the previous trading session. So we opened up significantly higher compared to this value. Now, sometimes the way I like to prepare myself for this is we could see, sometimes see pullbacks back into the prior trading day's value, which is going to be this area here at 62.64. But as you guys can see today, we just had strong opening momentum to the upside, and we just kept pushing and making new value higher and higher and higher, which is signs of a really strong trend, versus other days such as this day here, which the market opened up. Again, I'm going to mark up that 9:30 a.m. Eastern Standard Time candlestick. You guys can see we opened up above the previous trading day's value, and we dove right down into that previous day's value. So that's one thing to keep in mind there as well. So I like to look at where we opened up compared to the previous trading day's value areas. Now, number three is immediately I go into my chart analysis. What is the macro structure? What is the trend? Is the trend bullish? Is the trend bearish? Is the trend just sideways? Are we just chopping overall in the pre-market? Now, is there higher time frame imbalance? Do we see a break of structure? Where do we have liquidity pools that are already sitting inside of the current trading days in the pre-market session? Which again, like that's something I like to use a heat map for. I like to use a DOM for, because if I see that the average order on the book is 30, 40, 50 contracts, but then I see 300 contracts sitting at a specific key level, that tells me, hey, you know what, we have a big seller at this key level. I'm going to wait for price to push up into this key level. And if that selling actually does end up holding up and we see new offers reload on the order book, then hey, I might actually look to take shorts on that level. And this is how I'll like slowly start to prepare myself for, again, one of the steps that you guys will see a little bit further down. And then more importantly as well is know any gap fills, supply and demand zones, or where VWAP is currently sitting at. Are we trading above VWAP? Are we trading under VWAP? Are we pushing into an area of resistance? Are we pushing into a key level of support? Then number 4 is I like to check out my volume profile level. So I'll pull out yesterday's previous days of value area highs. I'll look at the previous days value area lows, and of course the POC as well. Now I'll look at the session profile and the cash session as well, because there may be minor differences there, and I'll use that as a zone. But mainly what I'm looking at is the POC. And then of course the overnight POC is what's super important as well, because that's where the market is creating value, or participants are creating value at that specific level. And we can actually find really great opportunities from that overnight point of control, which basically just stands for the most traded price of that specific day. So the market is currently open right now. So if we actually could see that we're actually starting to see the POC of today, which granted the market just opened up right now, is going to be 205. But sometimes what we'll see is we have 10,000, 13,000 contract traders at this one price. So that's going to be a key level for us, especially when the market immediately opens up. Now, what I like to also look for are potential single prints or zero prints inside of the markets, where the low volume nodes are or excess volume tails are as well. So essentially where we see trap buying or trap selling inside of the markets, and if there's any unfinished business inside of this market as well. And this is all pre-market, by the way. And then lastly, I like to identify where the market is accepting value and rejecting it. Where we think about acceptance, we're starting to see accumulation inside of this market. So when I say, where is the market accepting value? If we were to look at this trading day here, the market accepted value here, the market accepted value here, but we rejected all the way down here. We're starting to reject all the way here, where we were pushing through these areas of low volume. So whenever you think about acceptance, what you have to think about is consolidation, because both participants are doing a lot of business there. What causes these big breakouts inside of the markets are buying imbalances. So this morning when we opened up, we had a strong buying imbalance that pushed the market up until we both saw both market participants found acceptance at these new price ranges. And then from there, it's a whole different ball game on how we actually want to play that, whether we want to play that long, whether we want to play that short. Then number 6 is looking for liquidity pools and key levels. So number 1, I like to look at where the SPY is also trading as well, which is also going to be kind of important here as well, because the SPY might have the ES might have broken under some major key levels, but SPY hasn't necessarily broken under those key levels yet, which when you actually see different confirmations like that and kind of divergence almost, it could show us a reversal, which is actually what we just seen on ES recently. I like to look for where the major psychological levels are. So basically the round numbers like 5,000, 5,100, 50.25, 50.50, just random key levels like that. Those are just random examples, but where those major psychological levels are and how far we're trading away from those psychological levels. And like I said prior, I like to look for imbalance zones, so the low volume nodes or formed from large candles or delta clusters, which if we go back again, and this is why I like to use the volume profile a lot, because it'll show us real levels of liquidity. Moving into tomorrow, we have a low volume node where we really didn't conduct that much business here at 63.53. So this is going to be a potential key level for me moving into tomorrow. And where does that key level line up with? This previous area of structure, which it also lines up with this area of structure here as well. So what I would want to see, giving you guys an example, let's just say we were writing the pre-market, is for price to push down into this 63.53, and if price action actually rejects this area and we see aggressive buying off this area, I may find that as an opportunity to take this market back up long. Or if we push right through this level, then we're just going to see a continuation lower. Just to give you guys an example of what I look for when it comes down to those low volume nodes. Then we also have the footprint and delta readiness. So I like to check the cumulative delta. I like to look at where the current aggressive buyers and sellers are entering the markets, and if we have any signals of absorption in the pre-market as well. Then I have kind of like my bias and different scenarios that I look out for after I've done the majority of my analysis. So I like to write out what my primary bias is going to be, whether it's going to be like long, short, or if I really just am neutral. I'm not really looking to take any trades with the current action that I've seen in the pre-market. So really, this is going to be based off of higher time frame structure. So like an hour time frame, 30-minute time frame, even a 4-hour time frame with context, of course, where we're trading inside of that structure. And then I'll have a scenario A. So if price opens up above X, I'll expect this. And then I'll have a scenario B. If we reject the Y level, I'll look to take a fade or a mean reversion back down, just to give you guys examples. But it's never like I'm only going to look to buy on that day or I'm only going to look to short on that day. It's if we see this, then this is going to happen. This is what I expect, and this is how I'll take action on that. Or if we see this, then this is what I'll do instead. And what I'll do is I'll use my order flow data, such as the heat map and the footprint charts, to confirm either scenario A or scenario B. Because sometimes from like a price action perspective, scenario A could be playing out, but the order flow data just doesn't look great for me. There's not much edge there based off of the order flow data for me to take that scenario A trade, and there's not much conviction behind it, so I'll just avoid it completely and I'll save myself a loss. But again, it's not like I'm only going to be looking to take one side of the market throughout the entire day. I'm very willing to be able to switch biases fairly quickly. And then, of course, I have invalidation points for each idea, and then expected volatility based on potential news, or even just looking at like the implied volatility on that day. Then, of course, I have my risk plan. How much am I going to risk per trade today, which I only allow myself a maximum of 2 trades, sometimes 3 trades on a day, depending on how well I'm doing for the month. And then any maximum drawdown for the day, I like to have that predetermined. So once I hit that, I rip myself away from the computer and I save myself from continuing to give money back to the markets, which is a huge beginner mistake. Then, of course, what will cause me to walk away and not force any trades? Sometimes that just may be the market's chopping around and I've already hit my trading window and I no longer actually trade. Or sometimes that just may be that, you know what, I missed out on my setup. So it's just different things along those lines. I like to have that predetermined in the pre-market as well. And then, of course, my trading time is from 9:30 a.m. to 12 p.m. Eastern Standard Time every single day. This is I only trade within my planned scenarios, use order flow confirmations. I don't anticipate react. Of course, no revenge trading, no over trading. Discipline is more important than excitement and just trying to hit those like YOLO plays. And then more importantly, if the first trade is a win or a loss, I still have to just stick to the plan overall. Now, if the market is choppy or slow, then I just kind of step back and I sit cash on the day. And then no new trades after 12 p.m. The edge fades, volume things, and emotion starts to creep in, because by that time I start to find myself, I start to get really like mentally fatigued inside of the markets, and I start to get anxious and want to take a trade. So I like to really just try and cut it off by 12 p.m. as much as I can. And really from that point on, if I'm already in a trade, I can really only hold my winner at that point and just manage my trade appropriately. And this is how I like to wrap up my day. So from 5:30 p.m. to 6 p.m., I like to journal my trades and really review. So after the market close, it's time for the review process. So what I log, each trade, of course, with entry, exit, size, P&L, and then the setup tag itself, what setup I actually took. I like to have screenshots of the entry candlestick. So essentially what I'll do is I'll open up Thinkorswim, and then what I really like about Thinkorswim is, again, I'll just screenshot all of this right here, and I'll make sure everything is like right in range. I'll just screenshot all of this, which is really nice. And I'll take a screenshot of the footprint charts. I'll take a screenshot of the heat map. I'll take a screenshot of the volume profile. And then, of course, my trade management decisions. Now, I'll do this. I'll take a screenshot of all of this when I take the trade and then when I close the trade as well, so I can also see what happened after the fact. Not like looking at just the price action alone isn't enough. I like to journal what went well, what I could have done better, and was the trade aligned with my bias or was it emotional? Again, going back to scenario A, scenario B, and then my primary bias as well. And then, of course, like, these little things are optional as well, but something that could definitely help you out in your process in the long run is I like to rate my mental clarity, my discipline, my emotional status, really on a scale like 1 to 5. I don't think over that is necessary. And then, of course, I like to plan what I can do better already for the next day, and something that's going to be my main focus for the next day. So it's a constant cycle. And I promise you guys, if you guys could just follow something like this every single day and stick to this, what you're going to see is not growth immediately the day after or the day after that, but after a few weeks pass by and a few months pass by, you're going to be able to look back and say, wow, like, I'm really doing it, because you're really going to start to see a huge difference in your P&L. And this is something that's so important, that's so overlooked at. But I wanted to show you guys my process and what my pre-market game plan actually looks like, along with my journaling a little bit as well. So now that I've shown you guys my pre-market game plan, I want to go over with you guys my very first profitable trading strategy, which I still use this strategy to this day, and it works to this day. The only difference is now I actually use order flow to get much better entries and to also validate the strategy and really give me much more conviction to take the actual trade itself. But I hold this strategy near dear to my heart just simply because I've used it since the very beginning, and this is one of the strategies that actually helped me start making $1,000 a week, which again, it's incredible that this strategy still works to this day. Now, this strategy is what I'm going to refer to as a very, very simple BNR, or a break and retest. So first and foremost, guys, one thing that we have to establish is, again, remember the pre-market plan. Number one, we have to identify where we're trading at, what the market has done overall, if we open up above or under value. And in this situation here on ES, this is the opening candlestick. As you guys can see, we opened up above value. Not only did we open up above value, we also opened up above this 6,300 psychological key level. And look at how much volume we saw to the upside. There was a lot of aggressive buying that caused a big imbalance in the markets, and we saw the markets actually push. Now, ideally, since price action overall is bearish, what normally we would be looking to do is finding an area where we could potentially look to take shorts from, which based off of this higher time frame structure, we could definitely look to take shorts from this 63.56 area. So as we're pushing into this resistance range here at 63.26, scenario A would be if we see aggressive selling inside of this area and we see passive selling absorbing aggressive buying, then we'd be looking for a short. But the minute that we reclaim above 63.26, that idea, I don't want to say is out of the window, but we need to see the buyers defend it. And how can we do this without looking at order flow? It's by simple candlestick analysis. Now, again, like you're kind of going to be trading delayed data in this situation here, which will hurt your entries and your R multiples. But as a beginner, I promise you the strategy is super simple and super easy. Later on, you guys can get into order flow. So number one, we have a 5-minute close above the key level of resistance. That's the first thing we need to establish as a price action trader. We need to see candlestick analysis and candlestick confirmation. Now that we actually have a 5-minute close above the key level of resistance, which the key level of resistance overall is going to be 63.26, but we have an overall zone from 63.30 down to 63.24. But I like to have like specific price points. So if we look at this key level overall, this is where we're going to see a close here at 63.24. The resistance range, the specific price I'm going to be looking to trade around is going to be 63.26, and that's again all based off of this area right here where this candlestick printed this high, and then we saw the same rejection here. But again, you have to establish your areas of resistance. We opened up above 6,300. We're trading above VWAP when, again, it's volume weighted average price. So if we're trading above VWAP, typically you're going to see more bullish volume inside of the markets. So we already have two bullish signals there. Above VWAP, above 6,300, and we just closed and reclaimed above the resistance range at 63.60. So what I'm going to want to wait for in this situation here, now that we actually had a 5-minute candlestick close above, is I'm going to drop down to a 2-minute time frame. I'm going to wait for price to pull back into this area, and the more candle closes you get above your resistance range, the better in this situation here, because it's establishing that buyers are holding price above this area and that we didn't immediately see a big rejection and aggressive selling off of that key level. So what I'm going to wait for is for price action to come down, push into, on the 2-minute time frame, into our previous key level. So this is what's going to establish the break, is that we have two candlestick closes above this key level here, and then we're going to look for that retest and rejection of this area. So as you guys can see, this 2-minute candlestick is currently retesting this area. This next candlestick is the rejection here, and you're going to enter on that very first rejection, especially if you guys see that we have a big wick to the downside and then price closed bullish. This is your entry here. In a situation where you're going to be looking to place stop loss, your stop loss would simply be under the resistance range from the situation 63.23. If you want to be a little bit more generous, you can go down into 63.20. But before we even take the position, we have to analyze where we're going to get out of the trade if we're right, and where we're going to get out of the trade if we're wrong. So looking at the higher time frame structure, and what I like to do without kind of like jumping over myself is I like to trade lower time frames but use higher time frame targets, so that way I can really maximize our multiple. So the fact that we actually ended up closing above 63.26, which you guys can see here is going to be this major area of support, we could potentially look into pushing up into 63.55 if we push through 63.42 as well. So that's going to be TP1 and then TP2. So now that we've established this is where we're going to get out if we're right, where we're going to get out if we're wrong, we'll probably be like, let's call it 63.22.1 here, 63.22. And you guys could see after the entry here, we had a price push all the way up, a little bit of consolidation, which is a great sign. And then we had a price push all the way up and we started creating value higher, and we pushed all the way to full TP roughly around the end of the day here, which now, again, let's kind of go over it step by step. Number one is identify where we're trading. We're trading above the previous day's value. We're trading above this area of resistance, and we're trading above the pre-market VWAP. Notice that we had aggressive buying off the market open, and we broke above this major area of resistance. We pulled back into resistance. We rejected this this previous resistance is now holding us support, giving us a confirmation to take the trade. The stops are going to go under that low, and then the targets are going to go up into the next key level of resistance. You guys can see this trade just, played out beautifully here. And then again, like, there's still other things that you guys have to take into consideration, like key level placement, looking and identifying these areas of high liquidity, using the VWAP if price is above or under VWAP. But I want to show you guys my very first profitable strategy that allowed me to make $1,000 a week, and that still works and that I still use to this day. The only difference now is I'm using order flow data to give me that confirmation and that confidence to take the trade, because you have a lot higher conviction trading order flow than you will with trading price action. Now that you guys have learned a little bit of the strategy there as well, what I want to talk to you guys is how you guys can actually scale up. And more importantly, that's going to be through prop firms nowadays, especially if you're somebody that you don't really have a lot of money to your name where you could just immediately dump $20,000, $30,000 into a trading account. Prop firms are going to be your best bet. Why? That's just simply because you're able to manage a lot more capital, and these prop firms put rules in place so you can actually start building your own system and actually being disciplined into their own rules. You're going to have your drawdown limits, you're going to have your overall drawdown, and you're going to have your trailing drawdowns as well. And you guys have to take those rules into consideration when it comes to your day-to-day trading. But more importantly, the prop firms are there to actually help you build your own capital. And the way you actually want to leverage these prop firms is by reinvesting the profits that you make from your prop firm account into your own personal account. And then that way you're just having like a consistent cash flow coming in from the prop firms, and you funnel that back into your own personal account. So really what you want to do is, after you can establish at least, I would say, 4 weeks of profitability on a sim account, talking about after talking about everything that we've put into place today in this one video alone, not just the strategy, but the pre-market game plan and the journaling as well. If you're green for a month where you've made at least 5% or more, then I would definitely start with prop firms right away, and I would start copy trading with prop firms right away. And I would immediately just start focusing on scaling then and there. As you guys know, I did have one of the very first, largest, and verified payouts as a prop firm trader a few years ago, where I made $100,000 in a single payout. And that's something that you guys can achieve too. Now, at that point in time, I was only really trading in the markets for 4 or 5 years, which really is a long time, but 4 or 5 years flies super, super fast. And you guys can definitely achieve that too. And what you guys need to do is just be smart about it and use that money and reinvest it into your own personal account. Now, at that time, I was also trading my own personal account. At the same time, I was already finding consistency and success inside of the markets. And I would say that's actually a fairly quick process for me. 4 or 5 years to make 6 figures in a single month is I would consider it to be fairly quick for myself and for the majority of people that you guys actually see out there. But what's more important here, guys, is that you manage your risk, you manage your downside, and you just focus on our multiple. And what you're going to actually end up going through is you're going to experience different waves inside of your trading career, where you're going to prioritize win rate, then you're going to prioritize our multiple, and then you're going to really find what makes you money. Because sometimes what you think is going to make you money isn't what's actually going to make you money, and you're going to impose your own will into the market. It's like, hey, you know what? I want to be somebody that catches really big on multiples every single day, when in reality, your systems and your setup and the way you manage your trades before that mental fatigue actually hits is only good for scalping. And you should be scalping because that's what the data is going to tell you to make money. But you're not going to know that if you don't journal, which is why I'm telling you guys this, because journaling is super important. When you go back and you review and you go through that review process and you start critiquing yourself, you're like, Why was I holding that trade for so long? There's been 8 trades where I was up 3R multiple that I could have secured 3R multiple or 2R multiple, and I would have made money and my P&L would be green. Or hey, you know what? Every time I take 3 trades in a day, that third trade gives back all of the day's profits plus more. I need to stop taking that third trade every single day and only focus on taking 1 or 2 on that day. But again, that's part of like the trial and error process of what trading actually is. But anyways, guys, if you guys actually want to get mentored by me and trade live with me every single day, where you guys can actually watch me execute on these trade ideas and actually even take them with me and watch me turn $8,000 or $5,000 into $20,000, potentially even more live, then make sure you guys click that very first link down in the description. And then of course, every single trading platform and broker and prop firm that I talked about will also be in the description as well. And I will talk to you guys in the next video. Take care, everybody, and have a great rest of your day.